Hello, welcome to Key Points. I'm Jett Martin, and this is your daily stock market recap. On May 6, 2020, we closed the trading session off with the Dow Jones down 218.5 points, the S&P 500 down 20.02 points, and the Nasdaq is up 45.27 points. Shares in Lyft rose 18% in after-hours trading, but shares are still less than half the $72 price from their initial public offering last year. Shares of larger rival Uber Technologies were up 9%. The first quarter results offered a first look at the impact of the strict stay-at-home order to combat the spread of the virus in many of the ride-hauling industry's largest markets. Lyft's earnings also served as an indicator for the performance of Uber, which will report results later today. For April, riders were down 75% year over year, but Chief Executive Logan Green said Lyft saw moderate week-on-week growth in riders requesting starting in mid-April. In the United States, riders rose 21% in the first week of May, compared with a lower point on April 12th. Rideshare grew 25% in Atlanta, 35% in Chicago, 29% in Houston, 39% in New Orleans, 22% in New York City, and 25% in Seattle between the week ended April 5th versus the week ended May 3rd. Based on April volumes, Lyft expects a second quarter loss of less than $360 million before interest, tax, depreciation, and amortization. Lyft was expected to earn $1 billion in quarter one, but have only missed that by $50 million. Lyft competitor Uber will be releasing earnings on Friday, May 7th. Uber is offering all around the world and may have better numbers coming forward due to their food delivery service. We'll follow up on Uber tomorrow. Non-farm payroll drops by 701,000 in March, according to the Labor Department number released Friday that only begins to show the economic damage brought by the current situation. It was the first decline in payroll since September 2010 and came close to the May 2009 financial crisis peak of 800,000. Some two-thirds of the drop came in the hospitality industry, particularly bars and restaurants forced to close due to the economic shutdown. Today's numbers are shockingly bad and an underestimate of the damage already done to the United States economy, said Nick Bunker, Economic Research Director at job search site Indeed. If this is an indication of what was happening before the full force of the crisis hit, then this will be hard to come up with the words to describe the numbers in the future months. Prior to the virus hit, the economy has been humming along with an unemployment rate of 3.5%, the lowest in more than 5 years. Though the March report does not capture the full extent of the employment collapse, it does hint on what's yet to come. Citigroup estimates that the April count will show job losses closer to 10 million. Although there are many jobs that need temporary hiring, many Americans choose to stay at home on unemployment due to the fact they're actually receiving higher wages with the elevated unemployment rates until June. Stock pickup today is New Residential Investment Corp., ticker symbol NRZ. New Residential Investment Corp. is a real estate investment trust which focuses on investing and actively managing investments related to residential real estate. It operates through the following segments: irrigation, servicing, MSR-related investments, residential securities and loans, consumer loans, and corporate. The corporate segment includes general and administrative expenses, the management fees and incentive compensation, and corporate cash and related interest income. The stock is still down 63%, but is trading at $6.18 as of the day. At its peak, it was paying an annual dividend of $2 a year per stock. This was your market recap for May 6th, 2020. Please remember to smash that like button, subscribe if you're new, and check back in Monday through Friday for your key points of your stock market recap.